Here we are. It's early November 2020. My business partner, Christian, there is so much to talk about. So maybe we should just dive right in and talk about that. There's there's so much going on right now. So let's start with the big question. Where is the market headed? Like, everybody wants to know our opinions. Is the market going up? Is it going down? What's happening? And there really just is a lot to digest. So my opinion is that I think we're heading into a period where it's going to be a little bit challenging over the next 60 to 90 days. I mean, we have some news about a vaccine, but we don't have definitive news about when it's going to be distributed. So there's a little bit of confidence. I think the condo market, we're going to show that it's really been cooling over the last 6, 7 months, which is what we've been talking about. And then, of course, you have the low-rise sector of the market, which has been red hot. More so in some neighborhoods than others. Like, I know you do so much work over in Leslieville and Riverside, Riverdale, the beach, which has been a really hot neighborhood over the last number of months. So shall we just dive right in?
Let's do it. Let's dive in.
All right. So we're going to be talking today about the downtown core. And unfortunately, I do want to give a shout out to our third amigo, the three amigos here, Jay, who's been a little under the weather. We're going to get him back on again soon so he can talk about outline financials, incredibly low interest rates, the mortgage deferral cliff, what he's been seeing there. We have a little bit to touch on that there, but we just wanted to give him a shout out because he's so integral in terms of putting together this report and was unable to make it today, but we're here to talk about it. So we're focusing in primarily on the downtown core. We do have separate reports for the east end of the city. We do have separate reports for the west end of the city and the northern part of Toronto as well. So if you do want those, please just let us know. So again, we just talked really quickly, where's the market headed? But I think the big question right now is, who do you believe? Because there is a lot of information that's being presented. Now, the real estate board does a great job of presenting a market watch every month, which we're going to touch on in a minute. But Livable came out with a report here that said condo prices were up 8%, even though new listings were surging. And that came out, what was it, just a few weeks ago? I think at the end of October that came out, that report. The Globe and Mail talking about how, we're instability. There was, I think, a CBC report here talking about, investors are going to be jumping out of the market. So the question is, who do you believe? And we think that you should be taking this information and distilling it on your own and with a trusted confidant in the real estate realm, making decisions that work for you. So let's talk about the market watch. So this is what the Toronto Real Estate Board presents every month. And what you can see over here is what we've been talking about for months and months, which is all the economic indicators don't look great. I mean, GDP growth is down. Toronto's unemployment still quite high, which is not great. Inflation still, the Bank of Canada wants it in that 1 to 3% bandwidth. And we know that we're facing some serious, what's the new word going to be, headwinds over the coming months. And if you look down here at Toronto's real estate stats, this is where it can get a little bit confusing. Sales were up 25% over this time last year for the month of October. New listings are up. Active listings are up as well, but again, sales are still outpacing that. We're seeing the average price up 13% and days on market is down. So if you read this, would you not agree, Christian, that people would think, oh, the real estate market is doing terribly well?
I agree. And I think that's why when you pull in the GTA, the numbers can get a bit skewed if you're talking about downtown, or you're talking about, Rochesville or the beach. So I think it's very important to dive into them in a bit more of a detailed manner to kind of get, the real numbers based on the section of the city that you're looking at instead of these kind of whole generalized numbers.
Yeah, so let's use that as a segue to jump into that. So these are the articles that you can find showing, I got my screenshot at the top there showing my battery life on my phone, showing condo prices going up. And I guess the question really is like, who do you trust? And I realize that this is difficult. So let's talk about the downtown core stats. So what we've done this month is we've divided it into, we're going to talk about low rise, and then we're going to talk about high rise. So in low rise, I'm talking detached and semi-detached. I'm going to avoid townhouses because townhouses, you could have townhouses that are freehold with a common element fee, where you're paying a maintenance fee for a small, like the shared driveway. And then you could have stacked townhouses, which technically are just condos. So let's talk let's focus in on the detached and the semi-detached market in the downtown core, which again is fairly limited. We saw sales activity was up. I mean, 23% for detached homes, 38% for semi-detached homes over October of last year, and still up over the 1, 3, and 5-year averages. So sales were up. You can see right here the seasonal fluctuations. This is the red, the green, the blue lines, the 1, 3, 5-year, and 10-year averages. This is where we are now. So sales, the demand is higher than it's been in the past and over the last 10 years. No surprises there for detached. This is when the pandemic really kind of kicked in here. Everything was depressed, and now we saw that resurgence after. Same thing for semis. Semi-detached sales activity is up. No surprises there. Exactly what we said, and this in the downtown core. When we look at the average price growth over the last year, 3, 5, and 10 years, detached and semi-detached have continue to do well. So what we're seeing right here is about a 2 to 5%, 2 to 4.5% increase over this time last year. Again, just noting here that we're talking low rise right now. And when I look at the year-to-date price growth, we're up since the beginning of the year 7.5% for a detached, 8.8% for a semi. And then the 12-month rolling average, intended to smooth out seasonal fluctuations, we have an 8.2 and 8.5% over the last 12 months, right? And then we're zoning in here over the last 10 years, seasonal fluctuations, but the general trend has been up, up, up. And we put in here that the pandemic started here. And what you saw was, yes, prices were down. And that also had to do with the fact that nothing really traded for about a month because everyone was in initial lockdown. And then since then, it's rebounded in a very, very big way. I mean, Christian, you're seeing a lot of that wherever you are, but I know you do so much work in the east end of the city. And Leslieville, Riverside, Riverdale has been really, really hot for the last 6-7 months.
Yeah, and I'm seeing the same thing as that graph showing. I mean, there was a huge, obviously a big slowdown in the pandemic, and then things kind of shot up again, as you see there in that graph in May and June, July, and then things are kind of coming back a little bit, depending on property type.
So we talked about sales, and sales activity is up. So let's talk about, so sales, to me, let's talk demand. New listings and active listings being more about the supply segment. So new listings, the reason to me this is relevant is this is just showing what's coming to market. If it's not being absorbed, it's going into the active pool. Active listings is where you get those months of inventory. So new listings were up. Not usually that uncommon in the spring and the fall markets to see listings, more people list their homes for sale. So no big surprises here. And then I'm just going to skip over to active listings because this is where it gets really interesting. We had a 6% increase over this time last year for detached homes, active listings available for sale at the end of the month, a 60% for semis. Now, I put down here in my chicken scratch scribbles that remember we had a 23% increase in sales, but only a 6% increase in active listings. So these sales are outpacing active listings, which means that there's more pressure on prices to go up. Interestingly, semis, we saw a 15% increase in sales activity, but a 60% increase in supply. So we are seeing a little possible tempering of demand in the semi market. And I'd like to think that a part of that has to do with how much semis and detached homes have increased in price over the last 7 months. Would you agree?
Yeah, I find that's, going back to our previous talks and videos, the semi-detached market was on fire. So I think it's kind of catching up to it, like you just mentioned there, where it's kind of getting out of reach for some people, which is why you're probably seeing a lot of stuff, a lot more active listings.
Yeah. So we're heading into traditionally a slower time of year, December and January. We'll talk about that in just a minute. I'm going to skip over these active listings and just jump in here to months of inventory. So what we have in this is just showing you where a balanced market would be. The 12-month trend shows, I mean, we're going to talk about this big steep line here in just a minute, but you can see that for the low-rise sector, the 12-month rolling average months of inventory is still quite low for detached and semi-detached homes. To be in a balanced market, we need to be up here. But if we look specifically at the months of supply, just for the month of October, you can see that even here in the detached and semi-detached market, we're still very, very, very low months of supply, which is why you're still seeing homes sell quickly and for big prices. So perhaps we should jump into the next biggie that everyone's talking about, which is the condo sector. Everyone wants to know what's going on. And let's be honest, we made this call months ago. The writing was on the wall, and some clients, I don't want to say listened to us, but we're like, okay, we're aware of what's happening. And I want to be very clear. Desirable properties in desirable neighborhoods, and I'm talking about condos, still sell quickly and for great prices. I mean, I just sold a penthouse over at Bohemian Embassy in West Queen West this week. We were on the market for 3 or 4 days, and we got actually over the asking price. So good properties, good locations, good buildings still sell, but there has been a surge in a certain type of supply, which we're going to touch on here. So condos, we saw a 9% decrease in sales over this time last year, and over the last 3, 5, and 10 years for that specific month, we've seen decrease in sales activity. If we jump into the number, again, you can see here, this graphical representation might help you understand a little bit more that over the course of the last 5 to 10 years, we are on the lower end of sales activity for the month of October. So let's jump down here and look at average price growth. Well, this is becoming very clear now. Over the month of October last year versus this year, we saw a 1.1% decrease in the average condo price. And this is what we've been talking about and expecting for a little while, which is if this trend of more inventory continues to come to fruition, we're going to see prices inevitably, there's going to be some downward pressure on prices. So no surprise here. But over the last 3 years, 5 years, and 10 years, you are still up anywhere from 6 to 10% annually on your investment. So year to date, if you bought at the beginning of the year, technically your condo has increased 6.3%. And this is where it gets very, very interesting, because when I hear comparisons made about, this time last year, average condo prices up 5%, I'm like, okay, over Q3 of 2019. But if you look at the beginning of this year, we're actually down about, I think it's 4 or 5% from the beginning of the year. So it kind of depends how you present the statistics and what you anticipate moving forward. So the 12-month rolling average price growth over the last 12 months, smoothing everything out, we've got a 6% increase here. Over the last 3, 5, and 10 years, again, still very big gains. And what we're seeing here is the pandemic beginning back in March, April, and prices rebounded a bit initially, and then we're kind of leveling off a little spike. And this also has to do with the type of properties that we're seeing sold. So moving on to sales, the number of new listings. Yeah, massive surge of new listings coming to market, more so than we've seen over the last 10 years. When I look at skipping down to active listings, this is the one that is really a very telling statistic. We saw a 236% increase in the number of active condo listings available for sale over October of 2019. And look at this here. Over the last 10 years, it's been a 102% increase in the number of active listings. So if you're a buyer, you're in a much better position today than you were 6, 9 months ago, and there's no surprises there. Condo sales are down 9% over this time last year, with a 236% increase in supply. I mean, are you seeing, I know that you're seeing this in the east end of the city where you're hunting.
Yeah, I'm seeing it in the East. I'm seeing it everywhere. And I think, like I said, we've been talking about that for a long time now. Now the numbers are there. And I think we're going to see that number climb a bit more in the next couple of months, which I'm sure we'll go over next month and the month after. But I think we'll still see more downward pressure on the condo market in both the resale and the rental market.
Yeah, absolutely. So let's talk about months of supply, and really to move the needle here, because this is a 12-month rolling average, this quickly in this short a period of time, or this much in this short a period of time, is incredible. Again, we haven't seen it since, we saw it back here in 2012, we saw it in 2008, 2009. And for this to get up to close to a balance mark for a 12-month rolling average, this is a huge change that we've been talking about. So let's talk about the months of inventory specifically for the month of October. And what you're seeing here is we're at 5.5 months of inventory in the downtown core, more or less right smack on the higher end of balanced market territory. And we made the call a couple of months ago that we thought we'd be in buyer's market territory by the end of the year. And if everything continues as its current trajectory, we'll probably be there. But again, low rise still in a seller's market, condos in a balanced probably heading into a buyer's market. I'm going to skip over this slide here. This is just the sale to new listing ratio, which again tells us a little bit like, where are we in a buyer's market, balanced market, or seller's market? And we're happy as always to dive into any of these statistics with clients. But again, we're just trying to keep the high level overview here so that we minimize our time spent watching this. So the question, of course, is why? Why is this happening? And there's obvious reasons: the virus, the job losses, but the bigger thing is what's performing well and what isn't. Where we're going to talk about job losses quickly, immigration, what that means in the near future, the supply of new condos, and then finally a really quick snapshot of the rental market. So let's actually talk about what's performing well. And Scott Ingram, who's a realtor and wonderful statistics on his Twitter and on his site, he made reference. He actually broke down the supply based on condo size. And what he noticed was that there was a huge surge of 400 to 600 square foot condos, months of inventory, anywhere from, I think it's about 5 to 7 months inventory for that specific type. Once you get to about 900 to 1400 square foot condos, those are performing quite well, still very low months of inventory. And then when you get up to 2000 plus square foot condos, those again, a little bit more months of inventory, but still not nearly as many as the smaller condos. And I'm seeing that and I'm feeling that. So kudos to Scott and of course, John Pasalis from Realosophy too, for putting together excellent information every single month. I think they do a wonderful job of creating information to provide to their clients as well. Your thoughts on the smaller segment?
Yeah, I mean, like you, we both have properties that fall into both those ranges, and unfortunately for our clients, they're still there. But it's important for us to talk about these stats and what we're seeing in the market, because there's an expectation that these would fly off the shelf in past months or years, and they're just sitting there because of the obvious reason: people want more space. I mean, they will get rented, they will get sold. It just takes a bit more time because we're up against so many units. So I am seeing just that prolonged period on the market, because people just, most just.
It's about expectations.
Yeah,
it's about expectations, right? Like what your neighbor sold for in February or January is not really that attainable today. Like that's just the reality of the market. And if you need to sell now, then sell and recognize that that number isn't what you're probably going to hit today. Yep. If you can weather this storm for the next 12 to 24 months, then there's a very good chance that we get back to a very competitive market and prices returning back to the levels they were at before. So let's talk about that. Jobs. This is one of the big reasons why we're seeing differences in the segment, in different segments of the market. So small 1-bedroom and 1-bedroom condos have been hit harder, both for sale and for rent, because those individuals who are making up to $22 an hour or less have been disproportionately affected by the virus. And those earning a lot more money are still employed, still gainfully employed, and in some cases there's more opportunity in that segment. So that's definitely a reason for this very different segments, even within the condo sector. The smaller units, there's more supply available, and the kind of the mid-range 900 to 1500 square foot condos, there's a more competitive market. When I look at, there was a talk about immigration, and a few weeks back, the government came out with a statement here talking about how they wanted to increase immigration in 2021, 22, and 23. And although this is great news and very promising and gives us some optimism, let's not be naive to the fact that before all these people can come here, we need a vaccine. We don't want to bring people here who are sick and possibly infect other people. So that's going to take a little bit of time. And then even when these immigration targets are hit, or we start turning the tap back on, it doesn't necessarily mean that it's going to change things overnight. There's going to be a period of 3, 6, 9 months where it takes time for jobs to be created, people to come here in large enough numbers to absorb the supply as new condos continue to come to completion. I apologize for how small this graph is, but this is something that we've talked about in the past, where the Urban Nations report that we subscribe to talks about in Q4 and Q1 of next year, there are some big condo developments coming to completion that are going to continue to add to the supply pool for condos. And remember too, that a lot of these condos are not larger condos. They are smaller condos. So adding to a market that's already somewhat saturated. And then, of course, talking a little bit about the rental market, because I don't want to skim over that. The rental market this year is a graph specifically for purpose-built rentals, which are, think institutional investors who build a building and then the whole building is a rental. And for there's more information on their rental statistics, but for their rental vacancy rates, to go from 0.8% in Q3 of 2019 to 2.4, this tripling, their vacancy rate is huge. And if that's a barometer for also what's happening in the resale market, huge swings there. There was, I believe it was a 17%, I put it down here, a 17% decrease in the average lease price, I say list price, but it was the lease price of condos in the downtown core, which they are where the most densely populated regions of condos are located. And I think, unfortunately, for a lot of my landlords, I'm just saying, without that return of immigration, without international students, without a vaccine, I know it's great that it's in the works and it's going to get here not soon enough. But until we have those, that the normalcy, I think there is more downward pressure on rents. Your thoughts on that?
I'm right with you with that. I mean, I'm amazed at how many clients I put into leases last year have already reached out to me and are demanding more space because one, they were with their roommate last time and now both are working from home, and now we can get, for the same amount of money, we can get either a 2-bedroom or a 1+ den. I'm seeing numerous, especially in the core, buildings with 30, 40, 50 listings in a building. And you just mentioned the graph on the new builds that are going to come to market. I mean, that's going to be even more. So, yeah, I'm seeing prices, you have 17% here, depending on the neighborhood. It could be 20, it could be, I've seen even more than that, depending on the building. So, I think the number will continue to rise.
So I think we're both on.
Yeah, it's not all doom and gloom. I mean, we both agree that it will come back. It will just be a long road to get back to where we have to be, but we'll get there.
Yeah. And again, I think this is some reprieve for people who have been renting or even buying in some cases where, once again, I want to drive home the point that, unique condos, unique houses continue to get great sale prices. But when there's a lot of competition, it just puts some downward pressure on price. And we don't have the normal elements of normal economic elements that are driving absorption. So, and again, that will eventually change. And real estate has been historically a long-term vehicle for wealth creation. The final thing I'm going to touch on here is this pandemic-related deferrals. And an article just came out yesterday talking about, I think it was Home Capital Group. Here it is here. Home Capital Group summarized that they didn't really have, even though they deferred a number of mortgages, they didn't have a lot of defaults. So I think that this might be a sign of optimism for we don't want people to be defaulting. That's not good for anybody. I mean, people losing their homes, that's not a good thing. I don't care how opportunistic of a buyer you are. I don't want anyone I know, or anyone for that matter, to lose their home. But this is a good sign that there haven't been a massive increase in deferrals and defaults. So a nice note to kind of end on. So my prediction, seemed to have a little slide there. I don't necessarily think that condo prices are going to surge here. So let me be very clear with that. But my thoughts on where the market is and where the market is headed, I think the next 30 days, the condo market will be in buyer's market territory. I think Q1 is probably going to be a challenging market because we're seeing coronavirus cases surge. That may result in more lockdowns, which means even less likelihood of people getting out and buying. I think new condos are continuing to come to completion. As those new condos continue to come to completion, again, without absorption, we're going to see more supply, resulting in more downward pressure on pricing. And I'm optimistic that there will be a vaccine that hopefully is available in Q2. And at that point, maybe we'll see people take it and some degree of normalcy return. I'm trying to be an optimist here. It's been very hard. And I think the next 3 or 4 months is going to be very, very difficult.
Yeah, I'm like you. I'm very optimistic. I have the same sentiment. I think there'll be some downward pressure in the next month or two on the condo market. The freehold market, I think, is fine. It'll always be a supply and demand issue there, never enough supply. Funny enough, we had this conversation yesterday. A client of mine, as an example, we were going to list the property in December, and we had a very frank conversation about where the market is, where the market we think will be in December, the rising numbers of COVID cases, possible lockdowns, and we decided to push the listing till March, which I believe with the vaccine, the talk about the vaccine, I think you might have more buyer confidence at that point. So I think between now and then in the market, we will see some downward pressure, but hopefully in the new year, if the vaccine keeps going in the right direction, I think there'll be a better confidence in the real estate market.
Yeah, I mean, never before has the entire world really needed this vaccine. I mean, not just for the Canadian economy, but European, Asian, American, like everybody needs it. And there's a lot of people working towards it. So I'm hopeful that they'll be able to come to some resolution sooner. And if we do, then the economy will pick back up again. So interesting to hear all of this and to hear your synopsis. Again, if anybody's interested in the East End, West End, North End statistics, we're happy to provide them. Just reach out and let us know, or even have a conversation. And until next month, I wish you good health and safety, because we don't even see each other. This is how we connect and how we've connected with our group of realtors over the last 6-7 months. So good to see you. And I look forward to catching up again next month.